Welcome to today's session. Today we are going to look at one of the script called Burger King. This was newly listed and we do not have significant price action on a quarterly basis, and what we can see that price is currently in consolidation if you look at the quarterly chart. Now coming to the monthly chart, what we can see here is that there is a structure which is kind of sloping upward, and this is one of the area which has created a monthly kind of a demand zone structure. It's not such a great structure, but what we can see here is that price was coming down, found some buyer here and was able to push at least towards the opening of the month price. So this seems to be quite interesting. And what we are also seeing here is that price is stepping down gradually. It is trying to go up. While it is stepping down, it is testing all these zones at a shorter time frame. So let's look into the weekly chart. In the weekly chart, what we have here is that we have the respective consolidation, which is in this area. And in case we need to mark a demand zone, we can take the weeks into consideration because they are pretty much of the same size. And what we have here is that because it was listed significantly, then there was a pullback and then price went up. So it is kind of a forming a resistance here, which is around this area where price is testing and coming down. And we could also expect is that when the price may be trading in a zone. So if you see, this is one of the top area and this is the bottom area. So the expectation here is that unless something significantly goes wrong and the investor sentiments gets impacted, we are expecting the price to start forming similar structure towards the upside, and then it may again get resistance from this area and then come down. So if you see in the current price action, let us understand how it is happening. This was the August 6th August peak where the price came down, and from there it was started falling. Now, if you see all this area, this is one of the demand zone which was respected and was able to push the price up, but it got broken. Then this second demand zone here, it also respected and was able to make a green candle. And price is currently stepping down. While it is stepping down, it is also trying to go up. So if you look into this candle, this is a red candle as on 18th of November week. And what we can see is that uh, when price opened up here, so which was green, and then it tried to went up, reacted from this supply zone, and then came down, and it continued. Again, price found some buyer here, which is again at the bottom of this weak area, kind of a demand structure, and then again went up, then again found a supply near this candle, and then again it came down. So what we are seeing here is that while price is stepping down, it is also testing all the supply zones. So this supply zone is almost tested by this week here, and this is a consolidation. Then price went down again. This area got tested by this candle here, which is on 18th of November, and further this candle, which is on 17th of December, tested the 18th of November candle. So this is the way price is stepping down, and what you can also see a similar kind of pattern where we have consolidation here, then price stepping down, trying to go up, coming down again, finding a base, and then again going up, coming down, again consolidating, and then going down. So if the price finds the buyer here, it may also react in the similar way. If the strength is not sufficient, price may break towards the downside. So considering both the probabilities are there, let's look into the daily chart. Now this is the daily chart. What we have from the previous marking is that this is the weekly area where price reacted and then came down. So there is still some pressure here, selling pressure, because the price was not able to reach to the top of it. So whenever price reaches to this area, that time we may see some impact in terms of price going down. Let me mark a trend line here, considering this is the top area and this is the bottom area. And if you see it, this was kind of a triangle, which was descending triangle, and price was able to break out. So whenever you see similar structure, what happens is that price usually comes and tests this area before it makes a subsequent move. plot a line here so we can understand it better. So at this point of time, let me consider this portion so we can have more wicks. Okay, so if I keep it like this and we can draw a portion here. So what we can see here is that it is creating again a uh, descending and triangle, and if you consider this as a smaller version, it is a bigger version. So what usually happens is that the length of this slope is considered to be the target after it breaks, but here you can see it has achieved more than the target here. So similarly, what we can do is that we can also draw a line here, which is like the length of this zone, or this descending triangle. So if price breaks this level, then we can expect 200 level to be achieved as part of the target. So here the important thing to understand here is that price is stepping down gradually. It is not having too significant selling pressure, but what we see is the numbers of red candles are quite high. So whenever there are push, buyers are trying to push the price up, but always it is reacting from the supply zone. So if you see this, if this supply zone of 13th of August, 30th of August was again tested on 19th of October, so which was once in a point of time, it was a complete green candle. Then it became bearish, closed as a Gravestone doji, and then it came down. Again, price found some demand here, which is at the bottom of this area. But after this area is broken, we do not have anything significant which can stop the price here. The interesting part here is that if you draw a line like this, and you can see that this is the portion which where the price came down, and from here it started to move up, then found some consolidation and then went down. So currently, if we join this, it is kind of a big higher high, higher low kind of a structure. So here the low is not yet formed. So our expectation is that price will come here in this area, do some bit of consolidation the way it did earlier, and then it will start going up. So while going up, let me delete all this line so it is clear to us. Now looking at this structure, what we can see is that this is a rally, then we have quite a number of bays, and then we followed by a green exciting candle. So whenever such situation happen, when you have a breakout area, price usually do not react on the same portion. It try to come down towards the downside, and then it goes up. So for this trade, what we have to do is that we can plan our entry somewhere here, which is at the week of this candle. Or what you can also do is that you can have the entry somewhere at top of weekly zone, and have the stop loss at bottom of the zone, but with some buffer. So here you need to keep a buffer a bit high, because if price breaks this area, the only area available is bottom this portion, which is uh, which is 112. So if you have price reaching to this level, it will be at the lowest point of the origin. So it is very difficult to predict what the price is going to do and how it is going to react after it breaks this level. Then we have to wait for additional confirmation entry. So considering this setup, what you can also do is that to be more conservative, you can plan your entry somewhere here, so your stop loss reduces. And what will be our target? So if you look into this structure up to here, this portion, uh, this is a fresh area, which is still having some orders here. The bottom portion is tested by this week, so we cannot consider this portion, but we will have this area as a challenge where price will face some resistance before it can resume a uptrend. So this is one of the area where price will have a reaction. I do not consider this portion as a significant one, uh, because it has a lot of base candle and the move is also not very significant. And one of the important thing what you can see is that the more price is reaching towards this demand area, the speed of price is reducing. So this is a very good indication in terms of bullish move. So whenever price starts consolidating and reacting from here and creates a good decent amount size of candle, that indicates that trend may not continue downwards. So we have to see what is how the price action develops, but stop loss we need to be a bit careful here, because in some cases and the way Nifty is currently going, if there is more selling pressure, price will break this area, come down a bit later towards the downside, and then go up. So what you can also plan here is that rather than entering directly at 131.70, when price goes away from this zone, something like coming here and then going up, this is the area where you can plan some entry. So that way what happens is that you do not get immediately stopped out, and you can find some better way to get entry. The only challenge in this process is that if you wait for price to go down, it could also be possible that after hitting this area it creates such a bullish candle. At that point of time your entry will be here, which is going to impact your risk management and position sizing. So it's always better that you have a buffer in the stop loss area and you can plan your trade. So this is the way I am thinking about this stock. Let me know your thought about this analysis, and let me know if you need any stocks to be reviewed in the comment section. Thank you for your time.